These are my areas of interest. These are my areas of liquidity. These are the areas that I believe the market is more likely to run to. Of course, I highlight on the chart low-hanging fruit target 1, which is at 1 to 17, which is the relative equal lows, which is a 1. Alright, so good afternoon everybody. Hope you're having a blessed day. So today we'll actually be doing a review of the recording that I had for the morning session. The reason why I'm not posting the actual morning session recording is because during the middle of the recording and the trade setup, I lost internet connection. And so I had to do like a recording over it to give you guys like an idea of what was taking place. Now, because today is Friday and it's a no news day, mainly because it's a no news day, right? There's a no news day. You want to take full advantage of the pre-session, which is going to be from 8:30 New York Standard Time. And this is how the chart setup looked for the trading session that I was doing this morning. Now I have the London low highlighted. Now I had the London's low highlighted. I have relative equal lows highlighted. I have relative equal highs highlighted. And the London's high was already taken. Now, looking at this chart, these are my areas of interest. These are my areas of liquidity. These are the areas that I believe the market is more likely to run to. The question is, which one of these areas is the market more likely to run to? Currently, as I'm looking at this chart right now, when I was there at 8:30, I didn't have a bias in regards to which one of these it was going to run to. So I was looking for the market to tip its hand to me. So let's go ahead and move forward there. And let's see. There we go. So immediately upon the opening, around 3 minutes later, the market tipped its hand. A massive aggressive push to the downside, taking out sell stops, which I went ahead and highlighted there for sell stops being taken. So with the market tipping its hand to me, I immediately found myself with a bias. If the opportunity presents itself, I'm looking for higher prices into those relative equal highs that I highlighted, or standard deviation -50 or -100, depending on what you're looking for. For this model, I'm looking for 1 to 5, so those relative equal highs would have provided me with that trade setup. Now, it's important that I mention that if the market provides the opportunity, not because the market tips its hand to you initially, means that it's going to provide you with an opportunity. So you have to wait, which is going to be a bit of foreshadowing as to what happened later on during the day when I made a mistake because I didn't wait on the setup that is specific to my model. Now, what we're looking for is a shift in market structure. We're looking for a change to a buy setup market structure. And we're looking for a last dance FTG to allow us to participate in such a setup. Now, right now I'm just playing around with the chart, looking around at the different wick theories to see what's going to be the best way to frame this setup. And if you look here, perfect place to pause. I switched to a 3-minute chart to get a better view of what the market is doing, because on the 1-minute chart, it wasn't showing much of any kind of opportunities. And now what we see here, it's after the 3 minutes candle, that's the 8:53, not the 8:53, the 8:33 candle went and took out sell stops, creating an FEG, which would be the last FEG prior to the take on sell stops. And what's important in regards to the last dance, it is the last opposing FEG prior to the reversal. Meaning, if I'm looking for buys, it's going to be the last bearish FEG prior to the reversal, which would be this one right here. And if you pay attention, the market went, closed above it, and a new candle is forming. So I'm looking to get an entry here to take price higher. And as you can see here in this recording, I went ahead and set up the entry, and I'm clicking like crazy to try to get the limit order in. But if you realize, it's saying you're offline, the markets aren't, don't miss your opportunity. Well, unfortunately, I did miss that opportunity and the internet never came back. until way later on. So I'm just going to go ahead and skip forward and show you. Still didn't come back. So I'm going to go ahead and go over to the actual market. So I'm currently back at home. There's no internet here, but I do have the chart from before. Now, this is on the 1 minute chart. Unfortunately, I can't switch over to the 3 minute chart. But if you take a look here, this FEG would have been what the FEG would have been on the 3 minutes. And you see that the market returning back in it there, taking price extremely higher. Now, because I didn't participate in this pre-session trading, I went and looked into the morning session trading. And since it's a no-news day, you'd want to look for entries from 9:50 onwards. Now, here's the mistake that I made. I saw this bullish FEG here prior to the 9:50 macro, which is a 20 minutes macro from 9:50 a.m. to 10:10 a.m. During this macro, price tends to make its move in an aggressive way. So if the market is in consolidation, if it's just meandering around, not moving in any particular direction, you can look for the aggression within this time frame. Now, I saw this prior as a bullish FEG that was used to send market price higher, and I thought that I'm going to look for a conservative entry, meaning that I'm going to look for the market to break and close below this bullish FEG and use it as an inverted FEG to take price lower. Now, this is a fine idea, but what is the issue? This is not a part of my model. My model is using the last dance FEG. So now we're going to actually look at what the trade should have been and show you on the crazy trade that I missed out on because of me not following my own model. And it's probably because of, I know it's an excuse, but I can see where I was affected because I missed out on that trade earlier. I just wanted to get in and participate and have it on video to show you guys. But that's not the way you should do it. You should stick to the model in regards to the entry methods, the risk, the amount of trades you should take for the day, and stick to that model in order to find consistency. So, following the same rule, following the same level of consistency of the trades you saw on my channel, what are we looking for? We're looking for the last, so this is 10 a.m. So this is the 10 a.m. silver bullet right there. And we're looking for the last, let's make it pronounce. We're looking for the last FEG prior to the reversal, and we're looking for the last opposing. So we are looking for a sell, right? We're looking for a sell. The market has been running higher and higher and higher. It's definitely in premium, taking out liquidity while it's on its way. At this particular macro, we are looking for a reversal back into these relative equal lows and the London low that it's created. Now we're in the silver bullet, looking from the 9:50 a.m. and we're looking for the last FEG prior to the reversal. And what is this FEG look like? There it is. Bullish FEG, market breaks and close below it, validating it as a last dance FEG now. So we're looking for an entry in there. Market trades back up in there, would have been in the trade. Now, let's take a look at where you'd put your stop loss in this kind of trade. So before, it's consistent throughout my videos, you want to put your entry slightly below the marker, which is the last dance. And you want, normally I would have put my stop something like here. However, this is way too small of a stop. And more than likely, if you're looking to snipe this close, you'd get burned. So I would want my entry to have a little bit more breathing room. If you realize this is just 5 ticks, so I'll take it and put it here, which is at the high, the close of this bullish candle, which would give it a bit more space to breathe and have the entry there. Of course, I highlighted it on the chart. Low hanging fruit target 1, which is a 1 to 17, and then low hanging fruit target 2, which is the relative equal lows, which is a 1 to 28, and of course the high ball, the London's low, which is 1 to 31. But we see here that the market ran and gave us those relative equal lows for a nice 1 to 28. Now, if you're not a madman like myself and you don't love to be doing these sniper kind of entries, here is a more conservative method in which you can use. You can use the midpoint. You can either put your stops above here, right? You can put your stop above here, which would still allow for you to get an amazing 113 for the relative equal lows and a nice 1 to 8 for the low hanging fruit, which is still a really good trade. But as I mentioned before, here at the Simple Trader channel, Ustec, we're looking for these sniper entries. Another conservative method you can use is to put it slightly above the 50%, which would afford you a nice 1 to 10 setup. Which would afford you a nice 1 to 10 setup. And that would pretty much cover it for the day. Right now I'm down about 1.3% on the account. So it should be one trade on the new account for a loss. We'll continue Monday to see if we can reach to that 30,000. And then once we have that proof in the pudding, we'll start our journey. Thank you so much for watching. That's the entry.